Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. Good morning. It's Monday, June 29th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures Metals, minute episode 691. So if you haven't done so here, please roll your July grains and your metals as soon as possible. If you haven't done so already, we're getting a lot of indications here. The exchanges are looking at those delivery intentions. So if you need any kind of assistance here, please reach out. Send me an email, phil@bluelinefutures.com, or reach out to me directly here, and I'll help you to roll that contract over. Also, if you like to see our Navigating the Week Ahead email, we lay out the key levels in gold, silver, the cross-asset picture in crude oil, the S&P 500, and the dollar. It's one of the reports that we put out here over the weekend. You could register in a link in the description below. So this week is going to be a holiday-shortened week with Thursday's payroll report being the key catalyst here. It's moved up from Friday because July 3rd going to be that public holiday here in observance of the 4th of July holiday. So also we'll have Fed Chairman Morse. He will speak on Wednesday alongside that ISM manufacturing index and the monthly ADP report. So quite a busy middle of the week here with nothing coming out here today. So you take a look at the price action here of the precious metals. We do have a sea of red across the screen here. No real reaction in the dollar index. You did have oil prices with that flare up over the weekend with the tensions in the Middle East. Crude oil futures getting back above that $70 mark before easing back below that level. So we saw a bounce here on Friday in the precious metals, but we're really seeing no follow through. So it's going to be interesting to see how today's price action brings, because you do have August gold slipping about $50 here down to $40.50. You have September silver down about $1.60 at $58.06. You have September copper down 3 cents here at $6.17. It's really holding up the best out of the three metals. Now you look at the ETF flows, that really gives you the picture here on what's going on, because it's the retail investor that is really liquidating positions here still. So you look at last week's changes, they reduced their gold holdings by about 637,000 troy ounces. They increased their silver holdings here about 1.29 million ounces. And what it tells you here is that the dip buyers really taking place on that silver market here, especially in those mid 50 levels. So the headline is that the ETFs, they sold about 400,000 troy ounces of gold. It's the most in 3 months and the fourth straight day of declines. You look at the gold silver ratio here, sitting at about 69-1 here. So really getting stretched. And that's really where we're going to see that rotation take place here, with a lot of dip buyers coming into the silver market, avoiding that gold market, because year to date, those ETF flows down about 2.2% here. In the technical chart pattern for the gold market really is that falling wedge pattern here from the February highs. The key level resistance on the gold market, everyone's watching 4,200. The key level support 4,000. The level that you want to watch in the pivot level is going to be the Friday high at 41.11.5. Now you go to the silver, the ETF flows, well, they added 1.83 million troy ounces of silver to their holdings. And this is where I told you is that a lot of people coming in here looking at that indication of interest on that silver market, with it falling into the mid 50s. Now year to date, the percentage flows on ETF flows down 9%, and it has a similar chart pattern of the gold market, that falling wedge pattern from the July highs here. And the key level resistance, $60. The key level support, 55.40. And then the pivot level that I'm going to be watching right around that Friday high at $60. So you go to the CME's Fed Watch tool, about a 31.5% likelihood that they'll raise rates 25 basis points here at the July 29th meeting. You go to September, about a 48% probability. So really sticky here as far as that Fed hawkishness. Now you check it on the equities, because you got this big boost here going on in the NASDAQ, up about 1.2%. The S&P 500 up 0.8%, so 74.62. The key level that I'm going to be watching here on the S&P 500, one, you have this head and shoulders pattern that has formed on the charts. 274.93. That was a level that futures really struggled against here over the past 3-4 trading sessions. The key level support is going to be 73.50. And then you look at the gamma here, the positioning continues to point to negative gamma. We're seeing higher volatility in both directions here. In a technical chart pattern, is really that head and shoulders top that we're paying attention to. So you also look at the cross picture here, the cross asset picture, the dollar index sitting at 101.02. Now the key point here on the dollar is 101.5. That's the key level of resistance that we're watching. That was the high that we were recently seeing, and we've seen futures prices back off for about 3 straight days. We're really not seeing that boost and that rollover effect here into the gold market. So we really want to pay attention to it because the dip buyers in that gold market or in the dollar index quite active as well. You'll get 10-year treasury yield sitting at a 4.38%. That's up about 1 basis point here. And you look at crude oil up about 60 cents here at 69.84. There's a gap on the charts here right between about 67 and $65. So we'll want to pay attention to that. And then you go over to Europe and Asia. Well, it was really a choppy trading session with the MSCI Asia Pacific Index, and then European stocks, they did edge a bit lower. So if you guys got any questions, you want to check out the Navigating the Week Ahead, we'll start bringing back that chart pack as well here on the precious metals markets, really simmering down to the bottom of this falling wedge here. We've got a couple key levels that we're mapping out, but it's really going to take quite a few days to the upside here to really get some momentum, some bullish momentum back to the upside. Otherwise, we're chopping around here and building this base here near these lows. You got Bitcoin futures sitting just above that 60,000 mark. You got the grain futures here under a bit of pressure here. The only one that's positive here, soybean oil, reflecting some of that higher crude oil prices as well, and you're seeing that spillover effect in the sugar market additionally. So if you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures not trade does involve risk of loss, may not be suitable to all investors. Good luck, good trading. Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.